There's no good news coming in from the markets as well, which have opened to a massive fall, down by almost 600 points earlier, and in fact currently trading down by 569 points. In fact, Nifty in the red as well, and prominent losers in the Nifty pack were shares like Maruti, ICICI Bank, Reliance, Asian Paints, Mahindra and Mahindra, Yes Bank, Reliance as well. So all these causing that fall in Nifty, and ultimately the Sensex also seeing a massive fall, trading in the red as well. We can now go across to our expert, Mr. Madan, joining us for the latest on this. Sir, we've constantly been seeing a free fall when it comes to the market and also the rupee. On a more macro picture, what do you think are the major reasons for the loss that we've seen here?
I think there are a number of combination of factors which have led to what we're seeing in the market today. And I think the primary factor I would tend to think is what's happening to the rupee. The rupee has been depreciating, and we have seen a new low being reached. In fact, for quite some time, we saw the rupee in the range of 72 to 73 to a dollar. And now that it's crossed 73, I think there's speculation whether it will be crossing 74. And I think it's going to be a number of global factors which have been driving the rupee down. And I think the oil concern is probably the primary factor which has been driving the rupee. And I think until November, we will continue to witness this kind of volatility. We should remember that the government of India has tried a number of measures to try and improve the capital flows, control imports, but that really hasn't worked. So the answer is more not on the fundamental side, but more on what's happening globally. And in terms of the stock market, I think the second factor which we're looking at is probably what the RBI is going to do tomorrow. So I think you could probably see a decline even tomorrow morning until the RBI comes up with a policy, because there are concerns on liquidity in the system. The RBI has tried to assuage it to a large extent, but there is still nervousness in terms of the redemption pressures today on mutual funds, what we're seeing in the NBFC sector, kind of apprehension which is there. So I think these are the factors which have actually been driving the sentiment down. I think there'll be more clarity once the RBI comes up with its policy tomorrow and provides further direction to what its plans to do both with interest rates as well as exchange rates, and that should stabilize things further.
So you talked about the RBI statement that's due later this week as well, and analysts have been expecting the central bank to hike the repo rate by approximately 0.25% or so. Do you see that as a major caution that the market might be seeing at this point?
No, definitely. I think that's almost taken that the RBI will be increasing interest rates. In fact, we're also thinking that the CRR could be cut by 25 to 50 basis points in order to provide liquidity in the system. Because currently it's a situation where banks do not have enough funds. They look at their borrowing program. They're borrowing more from the Reserve Bank, which means that there is a liquidity deficit. And in order to correct it, it is necessary for RBI to do something. They've already announced that there will be some aggressive open market operations for which they will be buying securities and providing liquidity to banks to enable them to do lending. But I think the CRR cut will definitely help. But there could be some uncertainty on the CRR, but definitely in terms of interest rates, I think they will be hiked, given the fact that we would be looking at more FPI inflows coming in on account of higher interest rates. We should remember that the Federal Reserve has increased rates last week, which really means that foreign investors will find the US market more attractive compared to the emerging markets. And one way of countering it would be to increase rates by the Reserve Bank of India, which is what the market is expecting.
Yeah. So also wanted to understand later in the day today, the Commerce and Industry Minister Suresh Prabhu is having an interministerial meeting. He is supposed to look into the trade deficit as well. Also the reasons behind, the impact that rupee has been seeing. What kind of expectations do you have from that meeting and a possible impact on the market on that?
See, if you look at what the government has been doing, I think there are very earnest steps which are being taken in order to stabilize the rupee. And they are trying to do things on trying to control the non-essential imports. But we should remember that the major import component for us is crude oil. And you cannot really either have a quantitative restriction saying we're going to import only X number of tons of crude oil. That's not possible, because in the regime of WTO, quantitative restrictions are not really on. You could increase tariffs. But given the fact that the government is not providing any support in terms of cutting duties, it means that we are having higher prices of petrol and diesel, which is translating into higher inflation, which also means that the RBI has good incentive to increase interest rates given that inflation is going up. I really don't think that the government can do much, because I would tend to think that the rupee is being driven more by global factors. If you look at the fundamentals in terms of what our forex reserves are at around $400 billion, I think it's fairly comfortable, and I don't think there's any major risk which is there to a balance of payments like what we had in 2013 when we went in for the FCNR swap to stabilize the rupee. The situation is not as grim as what it was earlier, but definitely the fact that the rupee has been falling and the RBI has been trying its limited intervention, which has not helped. The government has announced certain steps, which again has not helped. Means we'll have to probably just wait and see when an equilibrium comes, which to my mind will happen probably in November once the sanctions on Iran are invoked, and then we get to know what the oil economics is like, whether the prices continue to go up or they return to an equilibrium.